Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of SEC filings. Today we're cracking open a report from Global Arena Holding, and let me tell you, it involves a deal so complex it's like trying to assemble furniture from IKEA blindfolded. But don't worry, we're here to shed some light on it and see what's really going on. In this report, we look at how Global Arena Holding is selling off a big chunk of its election services business. Think of it like a company deciding to sell its star player to another team. The deal is packed with cash, stock, and even some forgiven debt. But what does this mean for the future of Global Arena Holding? Let's find out. But before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about this in more detail or ask your own questions. This report is called a Form 8K, and companies use it to announce important events that could affect investors. In this case, the big event happened on July 1st, 2025. The main event is that Global Arena Holding entered into an agreement to sell some of its assets. This is like when a company decides to sell off part of its business to another company. Global Arena Holding made a deal with GS Acquisition Corporation to purchase mostly all of the operating assets from an internal company called Global Election Services. You can call it GS for short. This is like one company buying the equipment and customer contacts of another. Easterly CV Vzi LLC also plays a role. GS makes services for paper and online elections. Basically, they help run elections using technology like mail-in ballots. GS Acquisition Corporation is not only buying physical things, but also things you can't touch like ideas, customer lists, current contracts, and other paperwork. The buyer will also take over responsibility for certain debts or promises that GS had. However, they are not buying GS's cash, tax returns, or debt. So how much do they pay? GS will get $2.3 million in cash to pay off bills, plus they get 4 million shares of stock in a new company called GES Acquisition Corporation. They also don't have to pay back $1.125 million they owed. That's like someone forgiving a loan. This was paid to Easterly in 200,000 shares of Series A stock. Finally, Easterly will provide GES Acquisition Corp with a $2.2 million credit facility. This credit facility means that the company will have money that they can withdraw from. Here's another really important part. Two people, John Matthews and Catherine Weisbeck, will have new job agreements with the company that's buying the assets, GES Acquisition Corporation. This is like keeping key employees on board after a company changes hands. John Matthews will essentially become one of the bosses at the company, acting as one of the directors of GES Acquisition Corp. There are a few important requirements that must be met for this sale to go through. Approval from shareholders has to happen. Also, there can't be any roadblocks from the government saying no. Also, if either side has major unexpected issues, they can call the deal off. The deal needs to be finalized by the end of August or it is off. There are a few ways this deal could be stopped. Both companies could just decide to stop the deal and forget it ever existed. There could be a breach of contract. The deal can also be called off if they don't have all the paperwork in order or if some major issue stops the deal. Basically, promises made in this agreement mean that if things go wrong because of what each side promised, the other side is protected. If GS messes up, it has to compensate the buyer. If the buyer messes up, they will have to compensate the seller for damages made. If you want to read the full agreement, it is attached as Exhibit 10. There is also a document called the Certificate of Designations, which specifies other terms. It's still being hammered out, so it might change before it's finalized. The Certificate of Designations designates 6,000 shares of GES Acquisition Corp's authorized preferred stock as Series A stock, with each share of Series A stock having a stated value of $0.9375 TORs. The shares will earn interest at a rate of 10% per year. If the company closes down, those who own the Series A stock get paid first. They get whatever it's worth at the time, plus any interest they are owed. The Series A stock shares in any dividends that are paid out. Series A shareholders get dividends with the current common stockholders. The board of directors has to say that dividends are okay for everyone. The Series A stock can be changed into regular stock. Whoever has the stock can say, I want to change this into regular stock at a ratio of 1:1. The Series A stock changes to regular stock automatically if the company goes public. Basically, if it gets listed on the stock market, someone can't own more than 9.29% of the company's stock. But this can be changed if the person gives the company notice about it. GS Acquisition Corporation can't give out regular stock if it breaks listing rules like those of the Nasdaq. After 7 years, those who own the Series A stock can force the company to buy the stock back at a certain price. As a reminder, this document might change before it is final. There is also an agreement in place called the Credit Facility Agreement, where GES Acquisition Corp can borrow money from Easterly. But there is a catch. GES Acquisition Corporation must hit certain targets to get the rest of the money. Interest will be earned at a rate of 0.1% per year. GES Acquisition Corporation is required to pay back that debt within 24 months. Instead of paying cash, Easterly can take those debts and convert them into Series A stock. Like the other documents, this one isn't finalized, so it could change all. So what does all of this really mean? It looks like Global Arena Holding is trying to reshape its business. Selling off the election services part could help them focus on other areas. However, they are also selling off something that could be very valuable. Elections are kind of a growth industry. The deal involves a lot of moving pieces, cash, kind of shares going this way and that way, all tied into a lot of requirements. The company is relying on Easterly for cash. Hopefully that is money well spent. They will need to prove that the current leadership can make business profitable. The company is making a bet on the future, but the question is, does this bet pay off? A new company is being formed, one with a $2.2 million line of credit, and 2 people are going to be put in charge. Bottom line, this move is both a risk and opportunity for Global Arena Holding. Keep an eye on how well they execute this sale and how they use the money they get from it. If they can manage it well, it could lead to better results for the company. Alright, that's our breakdown of Global Arena Holding's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.